I, Joseph Robinette Biden Jr., do solemnly swear.
The inauguration of Joe Biden practically ensures a stronger demand for silver due to his push for green energy. The political, financial, and COVID-related chaos seems far from over. People are searching for a safe haven.
I would not expect anything but really fantastic performance for silver this year. I think this is the year of silver.
Here at Miles Franklin, we are currently processing $1 to $3 million in orders every day. Our president, Andy Schectman, says 2021 is following suit with the record-setting demand we saw last year. Welcome, everyone, to the Miles Franklin Market Update. I'm Elijah K. Johnson, and today we're welcoming Miles Franklin's president, Andy Schectman. Andy, thank you so much for joining us today.
Elijah, it's great to be here, buddy. These are interesting times, that's for darn sure, and I enjoy our time together each week, and appreciate you having me.
Definitely. Well, it's great to have you on the show. Now, the first topic I'd like to discuss is the inauguration of Joe Biden. We've talked about how really Joe Biden's presidency is very bullish for silver because of his push for green energy. We saw him rejoin. Now we're rejoined to the Paris Agreement. So what are your thoughts on the first couple days of Biden's presidency, and what does it look like for green energy and silver demand going forward?
Well, yeah, I mean, you can certainly see we're moving in that direction. He wasn't lying when he talked about I think his desire to move away from fossil fuels and combustible engines and into a Green New Deal. You can see that already by joining the Paris Accord. You know, silver is a very interesting asset in that it is bracketed on two sides, on both sides. On one hand, you have insatiable industrial demand that is ever growing, and in particular in the face of a new green agenda that will increase precipitously. On the other hand, you have an asset at 50% of its 1980 value, yet was the number one performing financial asset last year outside of cryptocurrencies, up over 50%. It is gaining momentum and is beginning to get noticed by investors. In particular, it's up over 100% since March, and that in and of itself gives it supercharged potential when you talk about a battle between the industrials and the investors. When we look at silver's potential in the face of a Green New Deal, well, you have an expansion of demand for silver in wind and solar, in battery-powered vehicles. Anything that conducts electricity just about uses silver. And whether you're talking electronics like iPhones and iPads and computer screens, anything that conducts electricity or is digital has a modicum of silver in it, all the way down to water purification and solar panels, which solar panels accounted for 20% of industrial demand as it is. And now that we will be moving in that direction more and more, with laws like in California where every new construction has to have solar panels in it, you will see that expand tremendously. And I think there's a new field of biocides as well, where you'll see silver-coated applications. There's a new phone coming out of the UK that has a silver oxide coating, which will kill bacteria and help prevent viruses from attaching onto surfaces, whether it be countertops or keypads or keyboards or your phone or anything that people touch. There'll be silver oxide in the spray that will help protect us in a world filled with viruses and bacteria. Anyway, but let's not forget about maybe the most bullish thing for silver that I don't hear enough people talking about, and that is the Chinese Belt Road and Rail Initiative that is now underway. It is the largest infrastructure program ever, the most ambitious in human history. It is connecting 65% of the world's population between Asia and Africa, 40% of global GDP. And if you don't think there is a tremendous amount of silver used in connecting this infrastructure digitally, think again. So when you look at silver, Elijah, as being epithermal, it's called, found in nature very close to the surface. When you realize that the big deposits were found many, many years ago, when you realize that last year with industrials on the sideline largely, you had a 330 or so million ounce shortfall between supply and demand. What happens when the industrials get back up and running here in 2021, hopefully? A new ambitious, hugely ambitious initiative by the Chinese, a whole new field of biocides to protect us from things like COVID on applications like cell phones and keypads, wind and solar and battery. The need for silver is massively increasing in the face of a continual deficit of supply. Because silver is found epithermally near the surface, the big deposits were found long before the advent of advanced imagery. And so you have to dig deeper and explore harder. And guys like Keith Neumeyer, when you and I did an interview with him a month ago, told us what's coming out of the ground right now is an 8-to-1, astonishingly, 8-to-1 relationship between silver and gold when the market has it priced north of 70-to-1. That is an anomaly. And if you remember when we asked Keith, hey, Keith, do you think this can last? And he said, well, you tell me, Andy and Elijah, how long can we continue as an industry to mine and pull out of the ground silver at 70+to1? I think it was closer to 80-to-1 at the time we interviewed him, and sell it at 8-to-1. It will have to regress to its mean. To encapsulate everything that I just said, you have massive industrial demand. And it's growing in the face of a depleted asset that is in continual deficit supply. And now you have the the investments as well that will wake up to asset classes across the globe that are all overextended dramatically based upon easy money and low interest rates. And silver being one of the only assets on the planet that has not become overvalued. In fact, its uses and its supply side would certainly support a price much, much, much higher than it is. And the fact that it's not, I believe, you're beginning to see the investment side wake up. And maybe that's why you saw silver quietly move up 50% last year and 100% since March. When you realize that hedge funds are fighting each other for pennies and percentage points, to see an asset class that is ever expanding, ever needed in a deficit, at half of its 1980 price, you got to be out of your mind to not have a piece of that. So I think 2021, Elijah, and sorry for such a long-winded answer, will be the year where industrials and investments battle it out in the silver playing field. And I would not expect anything but really, really fantastic performance for silver this year. And I think it's actually silver's year. I think this is the year of silver. If I were going to make a call here in January, I would say silver, with the exception maybe of cryptocurrencies, which are a wild card, will be the best performing asset once again of 2021, just like they were in 2020, with the exception of cryptocurrencies.
You talk about the investing public kind of waking up, and we've definitely seen that at Miles Franklin. Yeah, seeing $1 to $3 million of orders per day. Did you want to kind of put this in perspective for viewers? What kind of demand we've seen in 2020 and now we're still seeing in 2021, like compared to previous years? Because it's actually quite shocking, the increase in demand that we've seen.
Elijah, I've done this for 30 years. My father and I started this company together in 1989. I have spent my entire life, I'm 50, 2/3 of my life nearly working in this industry. And I have never, ever, ever seen anything like it. When I tell you I work 15 to 18 hours a day, 7 days a week, I'm not complaining. I feel blessed. I'm thankful for it. It is truly exhausting and exasperating, but I'm being dead serious. The level of demand is unlike anything I have ever seen. It's 3, 4, 5 times what it normally is. The expansion into the mainstream is striking. It's extraordinarily different. Financial advisories, people who have been very successful in traditional investments are waking up to precious metals. They say there's no bull market like a precious metals bull market for one reason. In every other bull market, it speaks to our desire to make money. They say that speaks to your greed. And when you make investments like equities, you're taught to, take some money off the table, play with the house's money, sell some, redeploy it into a different asset or a different security or whatever it may be. And in this industry, the higher the price goes or the crazier the narrative goes, the crazier the world becomes, only enforces people's motivation for buying it in the first place, only strengthens their grip upon their asset and their willingness to hold it. The desire to go back into fiat currency is non-existent amongst these people when they are buying it on a fear-based mentality. In other words, people are afraid, and they're not buying gold and silver to get rich. It's not about return on your money. It's about return of your money, and that's what people are thinking about right now. So, yes, it is extraordinarily busy, more so than anything I've ever seen in 30 years. 2020 was pure insanity. In fact, it's a blur to me. On top of everything that happened, working 15, 18 hours a day since February, 7 days a week has just become the norm, has not abated at all in 2021. The change of administration, if anything, has only strengthened people's resolve to the fact that the dollar is in very, very big trouble. There is $8 trillion in U.S. government treasuries that are come due this year, 2021. The majority of those, you could argue, owned by China, lots of them. And China and Japan are not rolling over their bonds like they used to. They are cashing them out. China is cashing them out to build, I believe, the infrastructure program that they're working on, the Belt Road and Rail Initiative. And so when you factor in $8 trillion of government debt that needs to be placed, along with Biden saying right off the bat he's going to offer $2 trillion in COVID relief, that's $10 trillion in 2021 before anything else. That's $330,000 a second. The dollar is being destroyed right in front of us, and it's almost as if they're trying to accelerate the process so we can get to that reset that everyone's talking about. Well, the reset happens when the dollar implodes, and it just seems that they are going full modern monetary theory, and people are realizing it, even people who are traditionalists as it pertains to their investments, securities and stocks and bonds, a 60-40% split. I mean, they look around them and they see an economy that looks crippled and stock markets that are at all-time highs. There is a disconnection, and they're realizing it. Even the people who never would have legitimized owning precious metals are now realizing the significance of it in an environment when valuations are so grossly distorted. And look, profit's not a four-letter word, Elijah. And for any of you out there that are sitting with massive gains in cryptocurrencies or in equities, taking money off the table, putting it into 5,000-year-old wealth, putting it on the sidelines, not looking to get wealthy, but looking to preserve it and to pass it on to your family. Well, that's what gold and silver are all about. So you're beginning to see that mentality, that awakening. And I talked about 2020 being a year for me described as the Great Awakening, not for me, but for people I do business with. And I would say 2021, if anything, it's accelerating. The number of financial advisories that I talk to every day is shocking to me. These are people who say, listen, we don't want anything from you. We just want you to take care of our clients. We're getting overwhelming demand for precious metals. So yeah, it's a trend that started in February with COVID and has not abated even for a minute here, towards the end of January.
Now, I asked viewers to submit some questions, and this one kind of gets back to what you were talking about earlier with regard to the ratio of gold and silver coming out of the ground. Keith and you are talking about how, it's about 8-1 or something like that. This viewer is wanting to know, shouldn't the ratio of gold and silver be based on the mining cost to pull it out of the ground rather than the actual ratio of how much you get out of the ground? So for example, if it's he's just, I think, throwing out a number here, but for example, if it's $1,000 an ounce per ounce of gold to mine out of the ground, and silver costs $20 an ounce to mine out of the ground, wouldn't the correct ratio be 50-1?
No, because I think that's the price ratio really of, what is the price and the cost of production, factors into the price, but it really sets the price in some respects. But what this speaks to more is the geologic relationship between it. In other words, it's depleting. And look at it this way. For thousands of years, we've had a relationship of 16 to 1, where geologically silver is 16 times more abundant than gold. For 150 years, we've had a ratio of about 42 to 1. The moral of the story is that the world believes silver is far more abundant than gold. And there are those people that will tell you that above ground supply of silver is far, far, far less than above ground supply of gold. It is a ratio that is wrong above ground. And even when we look at a ratio that is in mining that is going from 16 to 1 for thousands of years down to 8 to 1, cut in half. What I'm getting at here is that it is becoming harder and harder and harder and harder to find silver. And for thousands of years, human wisdom embraces silver as being far more abundant than gold. And it's impossible to quickly turn that 5,000 years worth of thinking upside down on its head. People just haven't embraced it yet. There are a few people out there vocally talking about this, Big Swear being one of them, Ted Butler being another one, and there are others out there who will tell you that, there was a branch of the U.S. government who a few years ago, like a geological survey society or commission, came out and said that silver would be the first element struck from the periodic table of elements because it's depleting so much. So whatever you take away from an 8 to 1 mining ratio and a 70 to 1 price, I would take away that it is becoming much, much, much harder to find and to pull out of the ground. And at some point, people will realize this and the price will snap. Maybe this is why J.P. Morgan amassed 1 billion ounces while paying a $920 million fine for price suppression. Maybe this is why you saw over 300 million ounces delivered off of COMEX to sovereign wealth funds and family offices last year in a group called the Others. You're beginning to see big, big, big money trade ahead of the crowd like they always do. And they're all doing it in a very methodic fashion. And so what I take away from an 8 to 1 ratio, Elijah, is that it's just becoming harder to get. And, Keith Neumeier echoes that. He said that he doesn't even look at the price ratio of 70 to 1. He just simply looks at the fact that it's half as abundant as it once were, twice as hard to find. And I think that's a trend that is increasing. So when you realize that 70% of all the silver in the world that's mined every year is mined byproduct, in other words, mining other metals, zinc and tin and lead and copper, whatever, you're mining other metals, you come across silver. The large silver dedicated deposits are, either gone or haven't been found, but they're few and far between. So, look, I think what he's saying is somewhat relevant, but more relevant to the discussion is that silver is vastly undervalued on every level between supply and demand, and it's a supply that is becoming depleted. So take what you want from it. I take from it that one of these days there's just not going to be enough silver to meet demand, and then the price goes crazy in a digital green world.
Moving now to our last viewer's question. They're wanting to know, what are the best and lowest cost options for domestic precious metal storage here in the U.S.? Are we allowed to physically view our holdings at any time in these storage facilities?
We have, in the U.S., we have a Brinks program in Salt Lake City, in New York City, and Los Angeles. We have the only fixed rate program in North America based upon the ounces that are stored rather than the value it encompasses. And I think it is the best storage program in the industry. If you believe silver goes to the moon, then you would want to be in a fixed rate program. Using a Vegas analogy, it's betting on the come, in the respect that let's use every other storage facility as an example. If you would have bought $1 million worth of silver from any storage industry in North America, or had it stored at any storage depository in North America since March, your storage rate would have doubled. It was $12 in March. It's north of 26 now. With ours, it stayed the same because it's based on the number of ounces. And if you expect silver to go as high as some people do, then the fixed rate program is certainly for you. We also do have a variable rate program with Brinks for those people who prefer that, and our rate is as good as anyone in North America. We also have the Dakota Depository in Fargo. The Dakota Depository in Fargo, North Dakota is amongst the very, very best choices in North America as well. It is off the beaten path when you talk about geographics here in the States, and I've worked with the family for 30 years. They are the salt of the earth and as honest as anyone I've ever done business with my entire career. So if you're looking for segregated storage, I would never choose a bank. I would never choose a private facility like in a strip mall. You see some of those safe box places. The only place I would choose would be a licensed, bonded, and insured depository, military-grade security vaults. And that's what Brinks provides. That's what Dakota Depository provides, all insured fully by Lloyd's of London or other insurers. All military-grade vaults, and all third-party. You never want to store metal with the company you bought it from directly. And Bullion Direct proved that by stealing $35 million worth of other people's metal, and I believe he is in jail, the owner. So we use the best in the industry, third-party, fully insured, and whether it's fixed or variable, those would be my two choices.
Well, Andy, thank you so much for joining us today. If anybody would like to call us, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. Andy, before we let you go, any last thoughts you'd like to add?
Look, Elijah, I think you, for those people out there that are looking to continue to add to your portfolio, I'll tell you that we are beginning to notice premiums rise. We are beginning to see greater difficulty in obtaining product. I think things are beginning to move a little bit faster than they did maybe even in 2020 in terms of the United States Mint, as an example, ran out of gold eagles and buffaloes. It's going on 2 weeks now. We do not know when the next allocation will be. We're assuming it'll be in February. Whether they ran out of blanks or just can't produce them fast enough really hasn't been determined. But the fact that they are not producing them 2 weeks into the new year, I think underscores exactly what I'm talking about. The world is waking up and the demand is outpacing supply. If you're looking to build your position, if you don't have any, act now, please. Forget about price. And I know that sounds disingenuous. I'm not trying to be. Build your core position now. If you're looking to add to your core position, buy on the dips. Heaven knows we see enough of those in this industry, and there'll still be more. Doesn't change where we're ultimately heading. But buy on the dips, don't chase the rallies. But if you're looking to build that core position, do not wait for a pullback. Even if it comes, I think we'll see the same exact thing that we saw in March with all of this demand. When the price falls, we see an increase substantially in business. And as soon as that happens, that's industry-wide, premiums go up, delivery delays rear their head, and getting product is not as straightforward and as linear thinking as a pullback in the market would have you believe. So in any case, I appreciate the time to chat. For your listeners out there who want to reach out to us, please email us at info@milesfranklin. We will answer your questions promptly, put you in contact either with myself or one of our licensed brokers, and make sure that all your questions are answered and you're treated fairly, as competitively priced as anyone in the country, and licensed and bonded. And that's what really separates us from our peers in this federally non-regulated industry. But in any case, I always appreciate the opportunity to talk with you, Elijah, and I'll look forward to doing it again next week.
Andy Schectman, thank you so much for your time, and God bless.
God bless, Elijah.